Good morning. It's the 7th of July. We are Signal Centre Talking Ball. I'm Joe Napier, joined by Jamie Pakenham-Walsh. Good morning, Jamie. How you doing?
Morning, Joe. Yeah, I'm all good, thank you. How are you?
Yeah, you look fresh, mate. You had a trim, I can see.
I did. It needed to tidy up. It was long overdue, so I'm way more streamlined now. I'm riding much faster, which with our race coming up in a couple of weeks' time is probably a good thing.
Yeah, absolutely. We're doing the City Race Standard Chartered 5K on the 19th, is it?
Yeah, I believe so. Sounds about right.
Yeah, cool. Yeah, so you might need another trim before then, though,
Oh
I
yeah, almost
reckon.
certainly.
Yeah, or wear a swimming hat or something.
Yeah.
Okay, lots going on in the world of markets, most notably going on in the political situation with the UK at the moment. It's a bit of a mess. I think we've already seen 5 resignations this morning from the
Shambles.
Conservative Party. Yeah, so let's get stuck into the latest headlines. It doesn't really feature too high up on the list of world events, but let's get on with it. So yesterday, the US services sector growth slowed. The ISM non-manufacturing index retreated to 55.3 from a previous reading of 55.9, although this was above the market expectation of 54.3. There was also a slowdown in new order growth of business activity, and business activity expanded at a slightly faster pace. We had Fed minutes yesterday, and they reinforced inflation concerns. According to the minutes of the June Federal Reserve policy meeting, many participants saw a significant risk of entrenched inflation, which would risk an increase in inflation expectations, and the rate is expected to remain above 2% for some time. As far as the July decision is concerned with regards to rates, officials expect a 50 or 75 basis point rate hike. The committee noted that a restrictive policy was needed and that there was the possibility of even more restrictive stance if inflation pressures persisted. In terms of US yields, they were moving higher after initial gains on Wednesday. Treasury yields lost ground with sustained selling amid underlying inflation concerns. The 10-year yield moved above 2.9%, which provided dollar support. In terms of what's going on with the UK services, the PMI construction index declined to a 9-month low of 52.6 for June from 56.4 previously, and below the consensus forecast, quite dramatically actually, of 55. So that was a quite a large dip and hit 23-month lows. In terms of what's going on with currencies, euro and sterling are still very much out of favour. The euro posted fresh 19-year lows against the dollar on Wednesday, registering 2-year lows against sterling as well. That's the sterling against dollar. Both currencies secured a limited corrective recovery later in the day as we attempt to stabilise some of the risk appetite that we've seen. The Bank of England still faces a dilemma. The chief economist Peel stated that further monetary tightening was likely, and he would be willing to step up the pace of tightening if data supported such moves. Then on to the situation with politics in the UK. Prime Minister Johnson suffered a wave of resignations from junior ministers, and there were strong calls for him to resign, but he continued to insist that he would remain in office. That's despite another 5 resignations this morning. So, all going on the political side in the UK, but we're all here for the charts, right? So let's get stuck into that. So we're going to start off with FX, and I'm going to bring up now the dollar index chart. This pretty much is the number one performing asset anywhere in the world at the moment, and the dollar continues to be on the front foot. So we are slightly lower today by around 0.1%. But as you can see, following the breakout here above 105.78, prices have continued to move higher, making fresh highs yesterday. As I say, a little mild bit of correction today, but I don't think anything overly concerning. Maybe what we'll see is some sort of retest of this new support to confirm that before further upside advances. And in terms of where we're looking to target on the upside, we've got a 78.6% fib level up here at 110.25. Then above that, we've got some resistance at 111.31. If we scroll back to the left-hand side, we have to go some way back just to find why these levels are relevant, and maybe need to flip to a weekly. So the 78.6 is of this entire move here, which actually started back in 2001 down to those lows that we posted down here in 2018. And this black line here is a key low from back in 2001, which looks to be a reasonable level to target on the upside. So we've got a decent band of resistance on the upside to target there, but overall the US dollar looks incredibly strong. So obviously that's going to mean the euro is going to look quite weak against it. We saw a fresh breakdown a couple of days ago and backed that up with further weakness yesterday, only closing mildly off of the lows that we posted in yesterday's session. But we're up around 0.25% today. So a bit of sympathy maybe for euro this morning, a little bit of a bounce. Again, maybe looking for a retest of this new resistance, which was support at 103.50-ish. In terms of what's going on with cable, take a quick look at that. That continues to hug this major support here at 119.33. We have seen the Fibonacci level at 78.6 level do not very much at all, to be honest. Little bit of an engulfing candle forming as things stand at the moment, up by 0.32%, but it's very early in the session. And ultimately, we do expect prices to remain bearish and for lower prices to be seen down towards this key support here at 114.10. So overall, we are expecting to be selling rallies on that one, I think, for the time being. Not going to spend too much time on the currency just because without Steve, we don't have the full coverage that we would usually have. But let's take a quick look at Bitcoin. Price is stabilizing here, really. Well, outperforming some of the other major markets as things stand for now. Potential for a bottom to be forming here. We've highlighted these two yellow arrows, which potentially could line up for a double bottom, but we'd need to see a break above this level here at 21,893. If that does occur, then we may see a corrective move higher towards 26,000. There may be an extension of that towards 28,800. So still looking quite robust actually at the minute, given the pressures that we're seeing elsewhere in other markets. Take a look at Ethereum. It's a similar situation, potential again for a double bottom, looking for a break of 12.82. If that can occur, then we may see prices stabilize even further and correct higher towards 16.82, then maybe towards 19.30. Moving on to commodities, let's take a look first at oil. That is struggling quite a bit at the minute, following obviously an enormous bull run higher. For me, it looks like we've completed a head and shoulders top here on the breakdown through 104.63. This is on Brent. The measured move of this head and shoulders top pattern comes in at 85.97. So that may be a level to consider on the downside. Looking to sell any advances towards the neckline at 104.62. Quick look at crude, similar sort of situation, looks to have formed a decent looking top pattern. We've broken through 101.07, looking to sell into rallies towards that level now, targeting lower prices towards 86.39 to 85.00. So looks as though we're still on a corrective path with oil, and we may see further downside in the very short term. Looking at gold, we've seen a pretty hefty breakdown on this as well, below 1786, obviously triggered by dollar strength. The 78.6% fib level did pretty much nothing in this instance, so we can probably discard that as a level to watch. Two key support levels down here, a band of support between 1657 to 1676 now looks to be the target. So it looks to be quite a large range in place here on gold. So with lows in these regions here. So we've got two touch points there and then a third there from August 2021, as well as a few more points down here. So it looks to be down here is where we're targeting on gold in the short to medium term. Silver has found some support around 1885 or just in front of it, but again looks pretty bearish overall in the very short term. But this looks to be a reasonable level of support on silver. So if we start to see some consolidation, then maybe we could form a little bit of a bottom on that one, but it's still very early in the day to be calling that. Moving on to indices now. So let's take a look at some of these. The Aussie market continues to chop in and around this region here between 64.12 to 67.57. Obviously more interested in some of the bigger markets in Europe, the DAX seems to be holding support at 12,431. And we've posted a couple of green candles consecutively, so we'll see if we can hold on to any gains there. Looking at the US markets, the Nasdaq is on the verge of trying to break up through this short-term downtrend, and if we can do that, then maybe that will trigger a decent corrective move in the short term. If we take a look at the S&P 500, still a bit of work to do here on this, although we have seen a reasonable correction take place over the last few weeks or so, but still this head and shoulders looms over the price action like a dark cloud, really, and still fancying lower prices to be seen on this towards our targets between 3,500 to 3,333. If we take a look at the FTSE, pretty choppy stuff given what's going on in the political climate at the moment in the UK. Really difficult market to trade at the moment, I think. So if that is a preference of yours, do be careful, because I think opportunities are likely to be quite limited with no defining trend really in place on that at the moment. That'll do from me, Jamie. If you want to take over the reins and have a look at some stocks.
Yes, that would be great. Let me put up my chart. There we go. Right, we're going to start with our biggest gainer and loser, as we always do. Starting with the biggest loser state is this KRNT, or Cornet Digital Limited, which was down 25.67%. This has been in a pretty rubbish looking downtrend for quite a while. Back end of November it was trading at about $180, and now we're down to 23 after the gap down we had yesterday. Let's have a look and see if we've got any news for this. KRNT plunged almost 26% after the digital printing company overnight said its Q2 revenue will trail its prior forecast range of 85 million to 95 million, with Cornet now projecting between 56.4 million to 59.4 million. That's a lot more of a specific target. So yeah, not a great move yesterday for KRNT. On the flip side of that, we've got RFP, which is Resolute Forest Products, which had this really huge gap up here. 63% in the end it was up. If we take this out to a weekly chart, it had a pretty nice move from the COVID lows. It was down at $1.10, kind of almost dollar. So over 1,000% move. We're almost at 2,000% now, aren't we, actually? But we had this period of consolidation, which you can see here, a bit of a breath for the market, and then it looks to have broken above. And you can see the volumes really starting to pick up. What are we? Thursday, so we've still got 2 more trading days this week. So having a look at why that's happened, let's have a look. It was RFP. Paper Excellence Group said on Wednesday that its subsidiary Domtar agreed to buy all of the outstanding common shares of Resolute Forest Products. The cash consideration represents an enterprise value of around 2.7 billion, including terms such as pension liabilities. So yeah, a really nice move if anyone was in on that. Looking at the stock heat map for yesterday's trading session, this is the S&P 500, as we always do. We take a look at this and see how the market performed. As you said, Joe, not too much going on yesterday. I think, like you said, the S&P has got more to do to really start breaking higher. Not a lot really notable. It was slightly an up day. You can see all the big names almost up about 1%, but nothing really standing out for me. Energy seems to be struggling a bit still, which I don't think anyone's opposed to. So we'll jump into a couple of the specific names. Who have we got here? Apple, we noted yesterday. We'll get this on a daily chart. Having this sequence of higher lows. We wanted to see a break above this black line, which would confirm potentially the reversal of this on the short term. We didn't really get it. It tried to break above, as you can see. I mean, we can kind of draw this line a bit better, but I'm looking at the opens and the closes. But we kind of sold off towards, what part of the session was it? Yeah, towards the end we had a little bit of a sell-off. I'm still looking for a close above this level, something significant to see a return potentially back to 150. I think that would probably be likely if we do get that, a significant close above there. What else have we looked at? AMC. Still being propped up by this trend line we've got here. We tried to break above this 1420 resistance and we failed, and now prices have retraced back down to this trend line. We'll see if that can hold up. It looks a bit worrying. If we get a significant close below this, I think we're returning back to about 1040, quite possibly anyway. Amazon, similar kind of story to Apple actually. We've got this kind of a bullish hammer style candle here. It's not really, but um, you can see the buyers really wanted to pick this up at 102 here, and it's had some follow through. We're up to 114 now. I'd like to see a break of the previous. Um, well, this would be a swing high, but if we get a break of this high, it would show a bit of a lightning bolt action and the potential for Amazon to kick on back to these 125 highs. So that's what I'd be looking at for Amazon. What else do we want to look at? Coinbase ran into the resistance, downward trending resistance line we saw there. Looking again now for a return back to test this $46 level, and my bias there is still for a break to the downside. Checking out Meta, we've looked at this a few times recently. We had that break through this symmetrical triangle. Price action has now been really tight since the middle of June, trading between about 170 and what's this 157, which is the 61.8 fib of a much larger move. So it's getting pretty condensed in here. My bias is obviously still a break to the downside, but for now it's pretty range bound and pretty tight price action as well. What else? We've got Tesla forming a bit of a symmetrical triangle pattern here. We've still got our key levels we want to watch of about 790 and down here about 625. But you can see the buyers are coming in slightly earlier now, and the sellers are coming in earlier as well within this trading range. So looking for a break of these two blue lines to signify which direction we'll be going to next. We are off the back of this pretty extended move downwards all the way from kind of 1,150 all the way down to 624. So that's a pretty substantial move down percentage wise. I think there's probably still more room for it to move lower. I saw someone value Tesla, or their price projection, was it JP Morgan, projected to go down to 300 or something. I'm pretty sure that's the case. Someone can fact check me on that. But I think there's a bit more room to move lower here for Tesla. If we do get a break of this blue line and then this green support level, I think the next area of support for me would be around these lows here, which would be down at 550. So that'd be a fair bit lower. But we'll wait and see what price action does before preempting that. Finishing off, we'll look at Rolls-Royce. We checked this out yesterday. Hit this support level pretty hard, pretty aggressively, and we thought there could be some buyers waiting here. Yesterday and into this morning, we have found those buyers. So we'll see how long that lasts. But we did think this was a pretty important level. To me, you can kind of say this is a bit of a head and shoulders again, or as I'd say, continuation head and shoulders. We've got the left shoulder here, the head, and then the potential for a right shoulder here. So certainly a break of this support level, and we'll have to zoom out for a weekly. Where can we really test? We haven't been this low for quite a while, since the pandemic really on Rolls-Royce. So it's got a fair way to go. I'd say potentially if we bring back to a daily, got this area of consolidation here. That's about 67 pence. So that's a fair bit lower than where we're at now actually. So certainly one to keep an eye on, looking at a break of this support. I think that was there one more to look at.
Do you want to look at GameStop? Because didn't they have a stock split yesterday? Is there anything going on the chart on that? I think it was a 4-to-1 stock split announced. I'll check the news.
Let's have a look.
May have been announced after hours.
Jump share. Yes, this is 21. Yeah, so that would have been yesterday evening. I didn't see that 4-to-1 stock split. When's that going ahead?
So the idea of stock splits is that it makes stocks look more appealing because they are cheaper in price effectively to buy. So
yeah,
it's a bit of window dressing really more than anything else. But it looks as though the shareholders have jumped on that a little bit with a bit of strength into the close. I think from what I read, the stocks split starts on the 22nd of July. So
okay. Oh, you can see there on the after hours trading that we did have a really big jump up.
Yeah. That nice little range there that you've already highlighted. So maybe a bit.
Yeah,
of
I think we actually put we put a bit of an idea out actually buying at this level, so that looks to have started quite nicely. Buying it all the way back up to this top bit. So yeah, a nice bounce there, good spot, Joe. I didn't see that. But so a 4-to-1 split will be heading back down to about what, $32. $32 it will be after that split if it's around the same price we're at now. So yeah, pretty interesting. This range we've been keeping an eye on this for a little while now. We're always referring back. Until we get a break either way, I think this will just be continuing. And on the downside, the target after that range for me is at least this $90 level, potentially even lower. And on the upside, we've got kind of our next level would be around here, 160. And if we get past that, then we've got a fair way to go to get to this 190. But yeah, it's interesting levels at the moment on GameStop. But this is certainly something that the Bulls will like to see. So yeah, thanks for picking that up, Joe. Good job.
No worries. Okay, so we can move it on now to the gun to the head challenge that we participate in on a daily basis, just to bring up the rules and what it is that we actually do. We come up with a live idea on the video. We must have stops and targets on these ideas. Of course, risk management is exceptionally important. All these ideas are placed at market, and these ideas will expire at 9 p.m. UK time, or when the stop or the target is hit. We maintain a performance spreadsheet on all of these ideas, and you can check out all of our ideas on our TradingView profile, where also you'll see our live stream. If you ever want to get involved and ask some questions, please feel free to do that in the live chat. But yesterday's ideas, I went long of NASDAQ, hoping for a little bit of a move to the upside. There was a small bottom formed on the hourly chart and a little bit of a bullish flag, which took my interest, but it wasn't as straightforward as I would have hoped. But nonetheless, it ended up with a winner, I think 0.4R on the session. And Jamie went long of New Zealand dollar, Japanese yen. As you can see, a pretty firm support level in place there. And I believe, Jamie, you were slightly offside with your call at 9 p.m., but avoided the stop out. So it looks as though your stop's in a pretty good position there, and it seems to be moving in the right direction. So not a bad call at all. So we've got to come up with two new ideas today. I've got one ready. I was scanning through the markets while Jamie was going through stocks, and what I saw was dollar index. It is the strongest asset out there at the minute and looks pretty good on the hourly chart as well. So we've seen a little bit of a pullback from what I can see here. I've got this red line drawn on as an area of support. We've seen it round off, come down to that support level, post a bullish engulfing candle on the hourly chart, and looks to be ready to move a little bit higher. So only looking for 2.3R on this one today. I'm going to get in 106.97. I've got a pretty tight stop loss at 106.70, and I'm going to be target a move up to 107.62. My longer term targets are higher than that, but this was basically inside the average true range for dollar index. So I've got the ATR bands here. So I think that's potentially where price could get to on an intraday basis. So that's why I've picked that level today. So yeah, that's my idea, and that's going to be published right now to TradingView. So if anyone wants to check it out, please feel free to do so.
Nice one, Joe.
Taking you enough time, Jamie.
It has. Funny enough, that was one that I'd highlighted, the exact same idea off the back of that small pullback dollar index had. But I had a couple waiting in the wings, and I think for me it's between XRP and the Swiss. The Swiss 20. I'm going to go with XRP, I think. No, I've changed my mind. I'm going with the Swiss 20. I've got it drawn up. We've got this resistance level here at 109.20-ish, and I'm just looking for it to hold up. It looks like it might break, but the thing with these, and quite often when I do this type of trade where price is battering a resistance line, quite often it doesn't work, but for the, let's say 1 out of, I don't know, 3 times it does work. It's something that can go on and make up for all those small losses, because you can keep your stop nice and tight, maybe even tighter than that if you're feeling really crazy. But that's kind of my logic behind it. Is I know that most of them won't hit, but when they do, they should be nice winners. So we'll give this a go today, selling the Swiss 20 at current price, which is 109.11. There we go. We'll keep the stop nice and tight just in case we do get whipped above. So keep the stop at 109.67, and we'll take profit. Let's have a look at those ATR bands. That was a good thing to look at. I'm actually going just below the ATR bands because we've got this level of support down here. So I'm going to target this level of support just in case we do get down there. So that is at 107.06. There we go. And if we do get all the way down there today, we'll be picking up a nice 3.66 R. So yeah, just looking for this resistance level to hold today on the Swiss 20.
Very nice. Good luck, Jamie. Okay, so that's that for the trade ideas for today. Again, they'll be published to TradingView if you want to check them out. In terms of data today, let's have a quick look at the economic calendar to see what's happening. We've got today at 12:30 the ECB minutes. As we know, the ECB haven't really taken much action compared to some of the other central banks across the world, struggling with obviously growth factors and other things that are preventing them from taking any large action. So we'll see if there's any update on the minutes later. At 1:30 UK time, we've got the US jobless claims number, that's the weekly number. And then at 4 o'clock UK time, we've got the US EIA oil inventory data. So keep an eye out for that if you are exposed to oil as things stand. And then tomorrow we got the big one. We got the US employment report, the non-farm payroll number, and then we have the Canadian employment number at the same time. That will be 1:30 tomorrow. In terms of stocks, we are starting to sort of move into earnings season next week. So there could be quite a bit going on a stock specific level. This is our economic calendar. As you can see this week, there's not really a lot going on, but if we move it across to next week, we can see that we've got PepsiCo reporting on the Tuesday. We've got JP Morgan Chase reporting on Thursday. And we've got Citigroup reporting on Friday. So kicking off next week with a few of the big financials, and we'll do a little bit of a dive into some of these next week to see how they look based on their previous earnings and what we can expect, and also what sort of volatility we can maybe expect as a result of these earnings as well. So something to look forward to next week.
Nice one. Yeah, I
Cool.
tell you what, I always look forward to earnings season, just get a bit of volatility and some nice moves. It's always
Yeah,
quite exciting.
definitely. Absolutely. And hopefully we can help a few people out and get them positioned on the right side of a few of those. But you'll have to tune in to find out. So hopefully we will see you all next week. Well, tomorrow, first of all, for non-farm Fridays. But then, yeah, focus shifts to earnings.
Yeah.
Okay. Have a great day, everybody. And we'll be back tomorrow.
Thanks, everyone.
Bye-bye.